Alright, so welcome everyone back to the third video on this series, and in this video I'll be showing you how to create an account with HotForex, and as well as how to open an account and how to sign into that account using MetaTrader 4 on the desktop. Alright, so here we have the landing page for MetaTrader for HotForex. If you have not created an account, you simply select the register option and it'll bring you to this page here. Once we're on this page, you're able to see the necessary information required before you can create your individual account. So there's your country of residence, first, last name, phone number, email address, date of birth, and password, and you register. After registering, they'll send you an email with your login ID for your dashboard, your broker account dashboard, and you simply copy and paste the ID and password right here and you log in. Good. So after opening the account, you would be led to your dashboard, and your dashboard might look a bit different if this is the first time creating an account with HotForex. You would need to have your account verified by sending in a copy of your ID and proof of address. So here in the dashboard for your HotForex account, you can see on the left side of the screen the option to create a demo account. So you can select my trading accounts and you'll see view accounts, open live account, open demo account. So for beginners, I suggest opening a demo account. To do so, you simply select demo account, and you can go for the demo 0 for an MT4 MetaTrader 4 account. You select, and here you can select your leverage, something like 1 to 100 or 1 to 200. The balance as small as possible, like 5. Okay, and you select this box and you click open. After opening the demo account, they will send you an email to your email address that you provided when creating the account, with the credentials to log in to your MT4. So the email will have everything you need: the server, the login ID, and the password. So I already created a demo account with my broker, so I'll just copy those credentials and put it into the MT4 app. In order to download the MetaTrader 4 app, to the left of the screen again, you scroll down and you can see MT4 platforms. You select that, and the desktop, you select that, and here you can download the MT4 for Windows, Mac, or Linux. So you select the download, it downloads, install, pretty simple. Alright, so here we have an example of how the email would look when you create your demo account. The account ID number, the password to log into your MT4 app, as well as the server. Sorry, yeah. Oh, I don't know, just this part, yeah. So in order to log into your account on your MT4 app on your desktop, you simply copy the server. Oh, geez. And paste it here, and you do the same thing with the account number and the account password. I do not trust that. The exact same thing. Alright, so real briefly, these are the symbols or quotes located on the mobile app. The orders open or pending orders will be located at the bottom here. You can see your balance, equity, free margin located at the bottom here. Your trade, your account history, news, exposure, alerts, and so on. Not really, we don't really use these, but it's good to know where they're located. Alright. To add a quote on the desktop version, we simply scroll up to the top of the screen and select File, and we scroll up to the top of the screen and select View, and on the view we select Symbols, and here we can see all of the symbols offered by our broker. We can scroll through and tap on the drop down to select different symbols to trade, and to add we simply tap on them and select Show, and then close, Show for example, and it's added here when you scroll down. So just an example of how you can add or remove quotes even from right here. To remove them, you can simply select Hide and you'll remove that quote. Alright, so just like the mobile, you can customize your charts here on a desktop. Your charts might look a little bit different. To customize the charts, we simply tap on the right click, then scroll all the way down to the bottom where it says Properties, and in Properties it'll be like this. On the colors, your color scheme might be green on black or yellow on black. To change your background is basically the same as the mobile settings: bar up, bar down, bull candle, bear candle. For this one, I have the inside of the bull and bear candles is black, and you can configure it however you like, and you'll see the different colors reflect there as you I don't know, change and go along. All right. One on this one, to remove the grid, we simply come up here and this box would be checked. You simply uncheck this box, and if you would like to have these period separation lines, you check Show Period Separations. Sometimes the charts might not be candlesticks, and to change that, you simply select the candlesticks. It might be a bar chart instead, or line, and to change that, you select the candlesticks option. You can also select a chart shift, and what that does is shift the chart from being directly to the edge of the screen here to a little bit more, and you can also control the spacing of the shift by clicking and dragging this little point at the top here. And what that does is gives you a little bit more space to analyze the charts. All right, so on the desktop version, we select the different time frames located at the top here. M1 for minute, M5, M15, and so on. And remember, the reason why we select the different time frames is so that we can get a sense of direction of the market and understand the overall picture, as well as behind the scenes of what's going on in the market. So it's useful for both day traders, swing traders, or even scalpers. The difference between the types of traders, just the use of the, I would say the use of the time frame, but is the actual amount of time per day you spend on a trade. Sometimes you're in for 5 to 50 minutes, as a scalper. You're in for like an hour to 2 hours, or maybe 4 hours as a swing trader. And as a day trader, you hold for the long term. It might be a day or two before you can close your trades. So yeah, so just like on the mobile app, we are able to draw up horizontal lines. As I'm sure you can see, I already have 2 horizontal lines on the screen here, red lines. But we're able to select this draw horizontal line option located at the top left of the screen, and you can just click to mark up whether it's a support or resistance zone. Like I explained in the previous videos, support and resistance is basically a zone either above for resistance and below for support. The current price where the price is reacted. So let's say, for example, this here, oh my bad, so this area that we have right here would be considered a support zone. Why? Because when the price was all here, it bounced off of that zone, came back to that zone, respected that area, and so on in the future. So we can say that this area is a support zone, for example. And for resistance, I would give you this exact zone became a resistance in the later on when the price broke below. It was above the price, and when the price was below it, it simply respected it. So that's how you spot support and resistance. I'll go a little bit more in depth as we go further in the video, but that's just a brief explanation of what support and resistance zones are. So we have the horizontal line, we have trend lines. Let me see if I can spot a trend here. All right, like for the most part. All right, so I'll also explain the proper use of trend lines. For now, I'll just show you where it's located and so on. And for the shapes or tools that you might need that you can't see located right here, you can just go to insert, and here you can add your indicators, your lines, channels, your Fibonacci, as well as your shapes. So just like on the mobile app, we identify an area of interest. Might not look as good. Alright, so rectangle properties. In order to edit, this is let's see something just faint. Alright, so yeah, so we draw up our shapes, and the use of horizontal lines, the use of trend lines, the use of channels. Generally, this is how we insert them. We first, of course, apply proper technical analysis and then we incorporate that with the use of these tools to gain an advantage or some sort of edge in the market. And finally, for this video on how to use MT4 on the desktop, to place a trade, you can either select one of the two options on the top left hand of the screen. You can either sell by market or buy by market. In order to place pending orders, you can select right above it, new order. So after selecting new order, we bring up this pop-up here where we can enter the parameters of our order, including the lot size, which is located here as volume. This affects the size of the trade that you open. So the larger the lot size, the larger the trade. A stop loss is generally a level where you say you don't want to lose more than this amount at this trade or from this trade. And the take profit is you saying you want to gain this exact amount. So you don't necessarily have to be at the trades watching to see when you're $100 profitable, or you don't want to lose more than $20. You don't have to be next to the charts in order for that to happen. You can just set the stop loss, which is saying you don't want to lose more than this $20, and it'll automatically close the trade at $20 for you. You don't need to be at the charts. And for the take profit, if you want to say, all right, I want to close the trade at $20 profit, then it'll do so automatically without you having to be at the charts all the time. So that's what this stop loss and take profit is. There's not much to say about the stop loss. It's pretty self-explanatory. As you mess around with it, you'll understand the use of it. It protects your account. It's a way we practice. It's one of the ways we practice proper risk management, understanding the use of a stop loss and take profit. Now, right here at market execution is where we can see the drop down for the different types of pending orders. So you select pending order, and then it'll give you this other drop down here with the 4 types: buy limit, sell limit, buy stop, sell stop. I explained these different types of orders in a previous video, but the general idea for each is buy limit is opened at the bottom, saying that the price will go down then come up. Sell limit is open at the top of the current price, saying that the price will go up then come down. Buy stop is open at the top of the current price, saying that the price will go up and keep going. I'll open more pending orders to give you a better example of how the pending orders work, but just an explanation for now. So the buy stop is located above the current price and is saying that when the price go up, open a buy. The sell stop is located at the bottom of the price, and it's saying when the price goes down, open a sell, or it'll keep going down. So for example, I wanted to open a buy limit order. That is me saying that I think the price of NZD USD, located at the top there, is going to come down, let's say to all right, we can just select that and we'll edit it a little bit. All right, so we'll open a buy limit order, and to do so, let's just carry it down a little bit more, just opening it for an example. So this buy limit, because a buy limit is a reversal order, it will be opened at the bottom of the current price. So we place it, and you see it's pending there. Nothing is open, no trades open, nothing affecting the balance, equity, or margin, until the price reaches this level here. then it will open a buy automatically. I don't even need to be near the charts, but it will open a buy. And then if the price goes up, I'm in profits. I simply close the trade. If the price goes down, I'm in loss. Depending on my strategy and my account size, how much I'm comfortable losing, I can close the trade or maybe leave it. Maybe it will continue going positive later on, who knows. But that's the general idea. For a sell limit, it is open above the current price, and let's just, for an example, put it at 68 200. All right, if you notice there, the sell limit is open above the current price, saying that when the price, or if the price reaches here, then I would like to open a sell from here, and I close it once it's in profit or with the required or calculated loss, if the trade goes against me, of course. For a buy stop is open at the top here, and it's saying if the price reaches here, continue buying, because I believe the price will continue going up. And a sell stop open here is saying if the price reaches here, open a sell, because I believe the price is going to continue falling. And that's the general idea behind the pending orders and the use case for the different orders. You might have strategies that would incorporate these pending orders, because an entry might be a little bit higher than where price is currently at, and it would be risky for you to enter the trade right now, because nobody knows when the price will reach to an exact zone. However, once the price reaches that exact zone based on your own analysis, then it would move in the direction that your analysis predicts. So yeah, the understanding pending orders would be important to a certain level. You don't have to use it as a beginner. You can just start using market orders and execute your orders just as fine. But as you go on, you would need to understand the use of pending orders. It's not compulsory, but yeah. All right, and that's it for this third video in the series. I hope it was helpful. Hope you learned a lot, and I'll catch you in the other one.